Hello, Uptrend strategy explained how to analyze stocks chart for swing trading. We are going to use two stocks here to explain our Uptrend strategy, and the first one is PGR. So today is September 21, 2025, and we are analyzing the chart after the market closed on Friday or before it opened tomorrow, Monday. So PGR, on Friday the market closed on the positive side, meaning the ending day price was higher than the morning price. So the bar is green and the price is highlighted in green as well. So at the end of the day price was higher than the price in the morning when the market opened. Our Uptrend swing trading strategy consists of you figuring out your entry point and your exit point. So for your entry point, is going to be around the long uptrend line. So you trace long uptrend line crossing multiple years. That is why it's long uptrend line. It's not a short uptrend line. And usually those long trend lines, you'll find them at the valley of the mountain, passing by the higher lows of the mountain. You started with maximum monthly chart to see multiple years ahead of time, and you trace the lines. You might trace multiple as far as you can go in the past, going toward the present, and continue tracing to see which one will get closer to where the price is now, passing by the higher lows. And from that point, you will determine which lines you are willing to wait and buy at. And this line seems to be where it touched base with multiple times, and then it went really high, has not gone back there yet. But it seems like this is quite a sharp up. So I don't know if it's going to come back down to this, or if it's going to find a place somewhere to continue from there as the valley of the mountain. But so far we are looking at it, we have not found any spot to get in yet. We do our chart analysis on a maximum daily chart to have multiple years in front of us. And this is the purple line that we highlighted as our entry point, passing by the valleys of the mountain. So we are waiting on it to come down to that line. To come to it is going to be making lower lows. By comparing the red bars, they will be lower, between the greens. And the red bar means the ending day price is lower than the morning price for that day. So when you reach it, it might go below it, it might not quite reach it. But when you start making higher lows from that point, after if you are confident buying, then you'll buy some share. But before you buy, you'll compare how it behaved previously around that line to see if it stayed there for a while before taking off, or once it touched it, if it took off. That way you know that it's okay to buy it once you start seeing higher lows, an indication that maybe it's going down, maybe, because it could turn around and continue going down for a little bit before going back up. And once you have that confirmation that maybe it's done going down, you can buy some share. And then you will be doing your analysis, comparing where the price is to where you want to sell it, your exit point. With large upward, large cap stocks, we aim for the next new high. So you will be doing the analysis once you have in the portfolio, comparing where the price is to where you want to sell it. And once it reaches a new high, you will be comparing that new high to the previous one to see when you reach it. That means you have to find the previous new high, and that one after it touched base with where you want to buy it, the next new high was somewhere here, and it pulled back a little bit, start creating the upside wall of the mountain to support that wall of the mountain, and then continue going higher and higher. We'll pull back to it and go higher, higher. So it went higher for a while. Knowing that, then when it reach, after it comes back down to this line and you purchase some share, knowing that when it reach the first new high from this point, you might decide to stay in the trade because you know that it will pull back to start creating a wall to support that upside wall of the mountain, but it will not come back down to this line in a while. So you might decide to stay in the trade longer for a while, not necessarily all the way until it's done, because you don't know when it's going to be done. It might take you a while to figure out that the pattern change. It stopped climbing the wall and is ready to start going down again. And at this point, I'm trying to trade one swing, even though it's a little like a position trading or a trend trading, but it's like one swing as well. For instance, let's assume this is on its way down. That's why it's making lower lows. Like this low is lower than this one, which is lower than this one, and so forth. Let's assume so that it's working on its descent going down. If we purchase it somewhere here, and to purchase it somewhere here is going to be, let's zoom a little bit. If we can see it, is going to be probably somewhere here. That way we'll know that this low, that's the red bar, is higher than this one, which is higher than, this one here, with some few exceptions between, because I'm seeing some red bars here that are higher than this one. So it pulled back a little bit before. So pretty much around this area, I'll even say around this area could be an entry point, because we will wait to see a 2 or 3, not 2, 3, at least 3 higher lows, and then we will get in the trade at a green or a first or second green bar that follow, a pullback. So let's assume we purchase it there, and that is the mountain, and then it's going to go down this way. We purchase it here, we'll want it to sell it somewhere here as well, because we'll have seen multiple highs along the way. So the goal will be to purchase it on one side of the swing and sell it on the same side of the swing before it move down. So like a mountain, usually mountain does this. So we want to buy it at the valley and sell it at the peak, somewhere along that side, before it start doing this. But there is so many swing trading strategy out there, and some prefer to wait until they start doing this. That way they can sell it. That way they know that they were in the trade for the whole time before it start going down. They might lose a little bit from being in it and then going down. They might lose what they accumulated around this side. So there are so many strategies out there, and once you start doing it, you will start customizing your strategy, start pushing yourself a little bit to see your boundaries, what you can do with the strategy you are using. At this point, I like to buy and sell at the same side of the swing, and even within that swing there are multiple swings within it. That is our long option strategy. We are staying in it within, even with those small swings, but on one side of that mountain before it start going down. That is the goal, but we are not there yet. But that is that. This is showing that we bought it earlier this year in 2025 around January along this side of the mountain, and then we sold it. So probably it was a new high somewhere here, pulled back to this, we bought it, and then we sold it. So you can see that shortly after it made a new high again and has been lower ever since. So this will be a short uptrend line swing trading strategy. It pulled back to this line, and then we purchase it there. This low is higher. Let's see, it's a little bit same as this one, but yeah, it pulled back to it, start going up, pull back a little bit, and we bought it at the green bar there. And then in January we have the dates at on the x-axis and the price on the y-axis. So in January, and we sold it a month later or so, in fact less than that, but yeah, a month. But I think we noticed it as the pattern continued, we noticed that it was just higher up for us to be in the trade. Therefore we sold it within a month to get out, which was a good thing, because right now it seems to be going down. We don't know if it's going to continue up from there, but we didn't want to stay longer in the trade. So that is a short uptrend launching trading strategy there. So, but yeah, in 2024 we use that strategy, but in 2025 we prefer to use the long uptrend launching trading strategy by buying it at the valley. This line is a support line for the upside wall of the mountain. If you are using a short time frame type of trend lines, you may not see the whole picture. It might look like this is the support line of the mountain, but for just, you know, the smaller mountain that is making along the way. That's why I prefer to use, for the long uptrend line swing trading strategy, I prefer to use a maximum daily chart so that I can have a bigger picture of the pattern that the price is drawing. For short uptrend line swing trading strategy, you start with maximum daily chart. Once you purchase the stock few times, you can go to maximum 1 year daily chart for your daily analysis. That way you won't have to keep zooming to see closer, to see what is going on. When you are working in the short with short uptrend line swing trading strategy, you want it to be closer to the bars to be seeing what is going on. But for the long uptrend line swing trading strategy, having the big picture in front of you is necessary. And once the price is close to where you want to buy, is when you want it to zoom in to see what is going on there. At this point we want to buy here, but the price is there. Therefore there is nothing really to pay attention to. We just look at it and we say, okay, it went up on Friday, but it's still in the drop down trend. Is going down, but it's still far from where we want to buy it. Let's go to the next stocks. So that is pretty much how we will do our chart analysis on a daily basis, to be able to go through about 70 or 79 stocks that we have here. So the next one we are going to analyze is PH. And if I was doing this analysis by myself, I would be going faster some days, slower some other days, because of some stocks that are running too. Some of them it will be very quickly. PGR will be one that it will be very quickly, because I look at the price, I look at when I want to buy, and then I'll go back to my spreadsheet and pick another stocks to analyze again. So but because I'm talking with you, I'm explaining the process. That's why I'm taking more time to do the analysis. PH, we like to buy a nest at either one of those lines here, and right now the price is far from there. Therefore it's nothing to do with it on Monday when the markets open, and then we'll go to the next stocks to analyze. That will be our analysis for PH as well. But because I'm talking with you, I'm going to explain these stocks that we purchased in the past in relation to the uptrend line strategy that we use as well. So PH, we'll notice that it pulled back to this trend line here, went up and reached a new high some days ago or so. So the arrows, this one, the arrows pointing up shows where we bought. The arrows at the top pointing down shows where we sold. We bought it in 2024 using short uptrend line swing trading strategy. But you notice that we bought it and sold it on that upside wall of the mountain multiple times every few days or so. So in 2025, we decided to use the long uptrend line swing trading strategy. We bought it around January, but guess what? It was going down because it didn't make any higher peak. From there, we became negative. It became negative in our portfolio for a while, all the way to April. And when it reached here and start going up from there, we are still negative until probably May. So we bought it in January, and for 5 months we are negative in it. So we kept it. From there, it start climbing up and reach a new high here, and we sold it because we bought it higher up. We know that if it is because it came down here, assuming this is going to be the new valley, not this one, is going to go up from there, and I have a feel like it could use this support line to rest as it's climbing higher and higher. It's going to be the upside wall of the mountain. Comparing it when it touched base with this line here, let's say from this line here, that was the last time. From here, that was the last time. It start making new high from there, and then pull it back to this, and then continue making new high. So that means from this, when it reach a new high here, it's going to be pulling back to rest, continue making new high. So it could do it for a while, for some months. If we go back to here, assuming it was like in November 2023, it's going to be making new highs all the way to December 2024. So like 1 year, it continued to go up. Of course, pulling back. It pulled back sharply around July, rest a little bit, and then continue. Maybe 2 months, a month later, it went back up again. So because this already tried to rely on the past, assuming that past will repeat itself, we could anticipate that it's going to continue going up. If this is the valley it wants to use, like it used it here and there as well, it's going to continue going up for some months and pull sharply to rest on this upside wall of the mountain and continue up a little bit longer. And that could incite us to remain in the trade longer. But because we bought a higher level here, we just decided to sell it and lock in that small profit that we got. So we bought it somewhere here. When I put the price, my mouse here, you can see the price equivalent there, and then we sold it somewhere here, and we're okay with that profit. But those are the decision you have to make, comparing your exit point once you reach that exit point, to see if you want to stay in the trade longer, or if you're okay with that profit you accumulated so far and get out. And because I think stay in the trade longer after your exit point is reached is a skill to work on and develop as well, knowing that it might pull back, but it's going to continue going up, because it needs to pull back to rest and then continue, have momentum to continue. knowing that and seeing the the positive the profit in the portfolio and keep it there is a skill to work on as well. With this long option and swing trading strategy, one thing I like to point out as well is your capital will be more in stocks form. With the short option and swing trading strategy, I noticed that a lot of time I have cash available to buy stocks because every few days I'm buying, every few days I'm selling. So you will have more cash available to buy a stock again. With this long option and swing trading strategy, your cash will be invested in the stocks that you purchase. Therefore, you will need to keep adding money to your account, saving more money every month to add to your account to have cash available to buy more stocks. As you are buying stocks and you are waiting to sell it at a higher price, even if it's positive, you are waiting. For instance, this one was negative for 6 months before it became positive. And when it became positive, if I decided to remain in the trade, I'll have the profit, but it's not cash form. Does that make sense? It is, and the stocks is in my portfolio. I don't have that money available to buy another stock. So, and sometimes you might make decision to just sell it, lock in that profit, and use that money to buy another stocks that is at a lower level that you wanted to buy. Could have been a decision why I decided to sell. I'm not sure, because buying it at this higher point, if there is another stocks leaving a valley line that I think I could have a higher profit when I spotted there all the way to its high, I could decide to sell this one and just get out. But those are decisions that you have to make for yourself and see how it end up be, like that way you learn from it and improve that decision next time, or repeat it again, depending on if you like the outcome. And over time you'll have a strategy that you'll have customized to meet your personality type and your risk tolerance as well. But just start small, one stock at a time. That way the small account that you have, that you start with, you can stretch it across the multiple stocks you'll have on your watch list to see which ones are working well with the strategy you are using and which one that are not comfortable with it, so that you can take them out of your list and add some more. And just target small profits. Let's assume that this one we bought it at $6.50 and then we sold it at $7.60. So $6.50, $7.60 is like $100 profit there, one share. So even if I say target $1 profit, it's just to say that buy as minimum number of shares, which is 1, that you think it can give you enough profit that you can pay your brokerage fee and have some change left, if that change is just $1. That way you allocate just a small amount of your capital to one stock purchase, so that you can have money to buy another stocks when it's positioned where you want it, where you are ready to enter the trade. That way you can stretch your money and you can trade more often to be able to practice the strategy you are using. I didn't use paper trading when I was swing trading. Therefore, I just recommend you start small with cash. I think using your own money to trade, you'll make sound decision better. Just start small. That way you can see if you are on the right path. And I'm just sharing my process with you to inspire you to start thinking about investing and trading stocks on the side as you know, beside your full-time job, so that over time you can create a stream of income. But right now we need to work on a repeatable strategy that you can just repeat over and over. Once you have a well curated watch list to work with, and you have a good strategy that you customize over time, you know that you just need to buy from your watch list. You don't need to go look for the next stocks that is available today for you to buy. And some days you may not buy anything, and some days you might find a lot that are well positioned for you to buy, and some days you will have a lot of profit, that a lot of stocks that are so profitable in your account that you know that you are going to sell them. So, and that is what we are working toward. We thank you very much for your time. We thank you very much for all your comments, and we thank you very much, you all that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and in soap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. Thank you. And in case I have not said before, we thank you very much for watching our videos, and we thank you very much all that subscribe to our channel. For more of our swing trading related videos, will you please check the playlist in the description of this video. We have videos on how to create your own watch list, and we have beginner tips as well. Thank you for your time.